What's up, guys? It's October 9th, 2024. Had a crazy rally today. We had a rally in FOMC minutes, which did nothing. So we rallied, then went sideways. It's the market cycle. Here we are on the daily. 45-minute looks like a great bull flag, but it's a bull flag high in the range, so we don't really know what's gonna happen. Bull's got continuation. Can you guys hear me? Yeah. I didn't know if the mic was on. Oh. So that's not quite 1-to-1. But the body is also not 1-to-1. So maybe there's a little bit of room left to go. We'll see what happens. We're not here to predict, we just react. Bar one's down here. So let's just get into it. So market cycle, it starts with a breakout. Where is bar one? That's bar three. Yeah, bar one, bear bar. Bar two, bull bar. Bar three, bear bar. Bar four, bull bar. And this is the first bull bar. So this bull bar is also closing on its high, but it has more tail. Bar, what is that, 4, is a first bull bar above the EMA, closing above its high. Above the midpoint, above its high. How does a candle even do that? So if we were going to measure this, you see how this middle blue line, the body closed above it. It's a rough estimate. So now we have a bull bar, and yesterday's price action was bullish. Gap up, we could have a continuation. I didn't trade today. I had to go to work. But one thing I was thinking, I was like, wow, this is a really nice trend. Could this be climactic? It was just steady buying. Bars are irregular, so that's not good. Lots of overlap, lots of tail. It kind of makes you feel like it's going to reverse, but it just doesn't. Bar 15 is the first pause, and it's really small. I think that's a good buy. That's the first reversal in a micro channel. Oh man, now I have to change it back. Oh, let me do it like that. So you can go like this. So yeah, 1-to-1 is met. You scalp out, maybe you hold. Very bullish price action. A lot of gaps are staying open. All right, guys, I'm doing this a little bit faster because I came home late today. So much freaking traffic. Let's see if we get 1-to-1 here. No. Okay, we don't. The second leg was really big. Let's see if we can get 1-to-1 from right here. I mean, obviously we're going to get it. We can see it, but just how does it look? So when we do these 1-to-1s, we're thinking. All we're thinking. Can the market... Oh my God. Can the market... Okay, you know what? Let me just use this tool. Excuse me, guys. I apologize. When we go 1-to-1, we're like, let's buy bar 44. And all we're asking ourselves, is the market going to hit this line or is the market going to hit this line? How do we estimate those probabilities? Well, always in direction is long. It's been long. All bear bars have been bought. We are pulling back. Bears have had leg 1, pull back leg 2, pull back leg 3. So it's a wedge bottom and a bull flag. You could buy that. But it doesn't hit that 1-to-1 though. What? I don't even... Oh wait, where did I get this 1-to-1 measurement from? If we were going for 1-to-1 for this would be the leg. So this leg gets put in and we want 1-to-1. We see bar 59, bad bear bar. Buy it, bang, 1-to-1 is met. You see? So we're asking ourselves on bar 59, at this exact moment, is the market going to go down 1R or is it going to go up 1R? Okay, well, we have a bull channel, multiple gaps open. We have 3 legs higher, so that's the end of the market cycle. Well, that's the beginning of the range. Now we're ranging, so it's a buy low, sell high play. We're at this previous swing low. Bar 53 has a huge tail that's closing at the swing low. Then we have a double bottom. I think bears are getting trapped on bar 59. And we race up for that 1R of 44 through 47. You see? Something that's been really happening a lot to me lately is the puzzle pieces are fitting. Always in long, second legs, 1-to-1, micro channels. The puzzles are fitting. Trade where there's a gap open. So I really hope to pass that through to you guys because these last couple weeks have been really transformative in my trading. I'm not saying I'm profitable at all, but what I am saying is things are sticking to the right side of the markets, going for reliable targets based off bars. It just is starting to work. I know I'm jumping around here. If you've seen a lot of the old videos, I was doing full-on breakdowns, but I'm just gonna go over trades and talk about the E-mini and the market cycle because I'm starting to realize YouTube needs a little bit of help managing trades and how to place trades, and I do too. So talking about them with you guys will help everyone. So we have a leg 1, opposite bar 15, leg 2, opposite bar 24, leg 3. That's 3 legs in a trend, so we should expect range bound price action, and that's exactly what we got. Market goes sideways for the rest of the day. It's buy low, sell high. This is a trend line break, and then it's a retest. So now we've got the trend line break and a retest. It is okay to go short, but unfortunately it's late in the day. That's the one hindrance we had for going short. If you're going to go short here, you really got to ask yourself, like, how quick can you scalp out? We're above the higher time frame EMA. We've been above it for quite some time. The last good bear bar was 44 yesterday, and it got bought quickly. So you really got to be considerate when you're taking the short. I would stick to longs or don't trade for this day. I'm not saying in the future, like tomorrow. I'm saying for this particular day, I would stick to longs or don't trade. And then again, even on that comment, if you're quick enough to short bar 30, that's a parabolic wedge, 2 legs lower to the EMA. That's not for me, but that's a trade because the bars got printed, so obviously people made money, right? If it wasn't there, it wouldn't be there. So leg 1, pull back leg 2, pull back leg 3, market goes range bound. We have to count legs in range 2, implied legs. Leg 1, pull back leg 2, pull back leg 3. Leg 1, we get very deep pullbacks in ranges and delayed second legs. Leg 1, extremely deep pullback, breaking it, but reverses, and we get a delayed second leg after a double bottom. In ranges, second legs don't have to be symmetrical. So if we're basing this off market structure for the bears, leg 1, pull back leg 2. You see how these, like, I really hope that you guys start to see, like, sticking to one thing is working. Leg 2s. Microchannels is a form of a leg 2. I'm using them interchangeably, so if I say microchannel, that's the leg 1. I'm looking for the leg 2. I'm looking for the microchannel to trade into the leg 2. I wouldn't take this, leg 1, pull back leg 2, but we didn't get a symmetrical move, but we're also in a range. So it's really cool. Please drop questions here, or if you're in the Discord, you're more than welcome to drop questions. The Discord is closed right now because I can't even believe I'm saying this, but I had someone try and scam another member, so Discord's closed for the foreseeable future. If you start to leave comments and we build a rapport over the next following months, I will leave you a Discord invite in a private message. But for now, Discord is closed because members are starting to get. One member almost got scammed. Thank God he had his wits about him. He was like, this ain't real. But yeah, so that's that. Ken, if you're watching this, man, my heart dropped, bro. I was genuinely scared. I was like, I can't believe this is happening. Bulls went for the breakout. I'm going to go for 1-1, but it's late in the day. It fails, reverses, closes on the EMA. Excuse me, guys. I got a little cough. A few months ago, like 2 months ago, I think in October, no, in November, September, I got coronavirus, and I don't have any more, but my respiratory system has just not been the same. Like, it's been weird. Coughing, like sometimes I laugh and I have to start coughing, or just randomly I was walking up a hill and I had to start coughing. I was like, dude, this was not like this prior to coronavirus, COVID. I got it in 2024. This is the first time I got it, so I got it super late. I still have all my taste buds. All right, I've just been rambling, guys. I apologize. Let's get back to the markets. It was a quick one. Leg 1, pull back. Leg 2, pull back. Leg 3, range bound price action. Market cycle is resetting. When this happens, we either buy low, sell high, or wait for the breakout. We got microchannel here. I got 1-1. We even got 3 bars here. This isn't a good microchannel though because there's no gaps open. 1-1. Look at this, dude. See what I'm talking about? 1-to-1 here, okay? So now we measured this and we want to know where can we get 1-to-1. The market moves in twos, like 1, pull back like 2, pull back like 3. Wedge bottom, bar 69, inside bar. So in this exact moment, are we going to go down 1R or are we going to go up 1R of these bars? You could say we're going down because of this bar, but look at the tails. Look at the tail, look at the tail, look at the tails. I think it's really important to always trade with the always in direction. The always in direction is 10 to 20 bars above below the EMA. Always in here long. We have overlap, so if you have bars going like this, like that on the EMA, that's sideways, that's range bound, we wait. This is our bread and butter. This leg is the leg you wanted today. Obviously, if you caught this, good on you. But this is, I think, the best trade was this leg here. Let me just draw on these micro gaps and then I go grab a bite to eat. And then I had a long day at work, so I really don't want to study, but I think this is like the most important time for me to study, just to really let my head know what's going down. Here we are there. See, so many gaps. It's hard to say get short with this many gaps open. Gaps represent trap traders, so limit order traders who are looking for the reversal are just straight up getting trapped. They have to buy back their position. As bulls are buying the market, bears are buying back shorts, and that creates a trend. Because the other side of the market is forced to do something. They're forced to either hold a losing position, scale in, excuse me, I'm going to cough, or they buy back their shorts. So yeah, and then look how the gaps are closing in range bound environment. So that's another clue or range. If you kind of misread the overlap looking for continuations, the gaps are also closing. So that's another hint. We might be more range bound. Market cycle leads up to range bound, 3 pushes. For the bulls lead to range bound price action. And gaps are closing leads to range bound price action. This gap actually stayed open right there. All right, guys. I hope you had a good one. I hope you guys stayed safe today. Again, drop some questions. Let me know what you guys think of this new little, switch up. I'm enjoying this a little bit more than just talking about bar by bar. I find that kind of boring. I do like talking about trades. I want to really focus on consistent trades. So I talk about it. I study it. I do it. I don't know how it can't happen. Hope you guys are doing good. I hope you guys make money today. If you learned something, share the show. Have a good night, everyone. I'll talk to you tomorrow. Bye.